All right, so thank you. Thank you, everybody that is online and listening to our presentation. The name of our company, as you know, is Graphano Energy Limited. My name is Dr. Luisa Moreno. I am the Chief Operating Officer and President of Graphano Energy. So this is a short disclaimer through the course of the presentation. The presentation will contain certain forward-looking statements, and so this is just a cautionary note. Please come back to these points afterwards. So let's then start with the value proposition of the company. Sorry, I'm just trying to write. The value proposition for Graphano can be divided into 4 key points, and then I'll dive into it in more detail. One of the points is the strategic location. So we are in Canada, which is strategically non-mining location, which is safe and stable politically, but also where our resources are. We have the only North American processing plant. And that is of huge significant advantage to us because we also have an agreement with the owners of that processing plant that will allow us to be able to potentially fast track to production as we advance permitting and we continue to expand our resources. So the other important value proposition point is the fact that the company started as a greenfield project. Now we have a resource, but we have a relatively small market cap, which will give investors a potential significant upside here, which is very, very important, I'm sure. Another point is the geopolitical advantage of our location. Jurisdictionally, our jurisdiction is Canada, and is relative to other jurisdictions in the world. Again, is fairly safe, and we have we're not very far from the United States that has recently, of course, put tariffs on everybody, but China was one that has received one of the highest tariffs across the board. And when it comes to graphite, which is our mineral, you know, it's one of the highest. It's 160%. So that creates a significant opportunity for us, Canada, as the only producers in North America. But also because, you know, other projects are much further away in terms of transportation than ours, as it connects to the supply chains in the region. But let's dive in and discuss a little bit in more detail and understand the projects that we have. But before I moved on, I'll just touch quickly on graphite. So obviously, the main topic around graphite is the use of graphite for batteries, and I'll give you a few more statistics about that. But graphite, even if batteries did not exist, or there was no application for that, there's many other important applications for graphite, which includes the fact that because it has very high melting point, it has become a very important refractory material for applications in steel industry, cement, and so forth, as listed there. It also has a very high electrical conductivity, and some of you might have heard applications in graphene and things like that. So it's also fairly soft and slippery, and one of the main applications for graphite based on that particular property is in lubricants. So if you look at the graph on your right, batteries only account to about 10%, but there is a world of other applications that a producer of graphite will tap into and can also monetize. So one important point, as it's written at the bottom, is that China makes this material really critical because it's the largest producer. And when it comes to anode battery grade graphite or anode grade graphite, the production, China accounts for even more than 80% of that. I think it's more than 90% in fact. So what that means is that there is a need to build that supply chain outside China, and Graphano and others are lining up to be able to fulfill that. So just some numbers, and these numbers keep varying, but I think we can all agree that EVs are here to stay. Now, the speed at which we will basically phase out internal combustion engines is probably debatable, but we are decisively moving in that direction. And in order to capture a sizable portion of the market for electric vehicles, projections show that we will need per year about 5 million tons of graphite. So that is significant, especially when we think that there is only about 1.6 million tons of graphite production currently. So if you imagine that a lot of the mines outside China anyways are producing, have a capacity anywhere from 20, 40, some of the larger ones globally maybe 60 or more, you could just imagine how many mines we will need to bring into production in order to be able to supply millions and millions of tons of graphite. So that is an opportunity for many companies, and there is an opportunity for us in the West to be able to contribute towards the development of a supply chain, and this is what Graphano really is looking to do. So let's touch again on the point of the geopolitical situation that we are facing currently in the world, and what implications are there for companies like Graphano. So one of the key things are obviously the import tariffs that the US has imposed across the board. But as I mentioned, as far as China is concerned, they put about 160%. What that means is that it creates immediately a market opportunity for new suppliers into the US. It also creates a price floor. If there is if the average price, say, of graphite that was imported into US, and it's true, it was about, I think, about $1,000 per ton. If that was the price before, on average, before the tariffs, now you can imagine that those prices for those that are continuing to buy from China is more than 2,000. That creates immediately a price floor there that would allow us to sell very near to that price at a significant premium. But what is Canada doing to be able to seize this opportunity? Some of the things that we're doing is expediting permitting, because as you know, around the world, especially in the West, though, because our environmental standards are higher, so that basically comes with long due diligence periods and permitting periods as well. But in Canada, the Prime Minister opened a new office to basically fast track the permitting of projects that are deemed of national interest, including critical materials. So for Graphano, we need to position ourselves as such. And we think Canada wanting to continue to be a significant supplier, producing supplier of graphite, opens an opportunity for the company to be able to fast track that. And as I mentioned before, our model is one now, because we have an agreement already with the processor, is really a sort of a quarry type model where we want to be able to mine and then sell the materials to be processed at the plant. And we are in a production sharing agreement contract. So the other thing that we're doing in Canada, so Canada Critical Material Strategy provides tax incentives, that is Indigenous partnership frameworks to accelerate the sector. There are grants. So there is a number of things that Canada is doing in collaboration with Europe as well to be able to build these supply chains. And this is all around these geopolitical pressures and theme that we are seeing, and is working as an advantage for those that really been trying for years now to build these supply chains. So let's dive into the actual projects. So I will be talking about 3 of our projects. One of them, our first one that was acquired, is the Lac Aux Bouleaux project. So the key important things for investors to understand is that, again, the location of the project is key. So because we are in a mining jurisdiction, it has been mining of graphite in this region quite a lot for many years, I mean, and we are neighbors to the only producer of graphite. So in red, you can see the various claims. And so right north in that picture, you could see over there, let me just move this away from my, okay, there we go. I can see it now better. So that is the Northern Graphite Corp Lac Aux natural graphite mine. So you can see at the top there, that is where the processing plant is. We are so close that the entrance to their mine is through our claims. So there is infrastructure, power lines across the various parts of our infrastructure. We have access to water, to power. We established recently an initial resource for Lac Aux, and it is mostly at surface, so less than 50 meters, within 50 meters from the surface in many cases, and is relatively high grade. And so that is, that talks about the quality of the resource that we have. So I already mentioned strategic location next door to the only processing plant in North America, and we have a processing agreement with Northern Graphite, which allows us to be able to, once in production, to have our ore processed at their site. What that means is that essentially we will have to spend money developing the mine site, but when it comes to the actual processing plant, that is an effective price of zero for that capex, which is very, very attractive to us and to investors, I believe. So this gives you an idea of the various targets within the property. Again, at the northern part here, there's Northern Graphite. So here is the various zones. This is the way graphite really occurs in this region. I'll show you a profile of resource shortly, but it's pockets of different resources, different zones, and it tends to be structured as well, semi-narrow, but with different layers and so forth. And this is the way Lac Aux has been mining, for all these years. So of all these zones, we have put out the resources I will show you shortly for zone 3, the historical resource. There was a mine there previously, and for zone 1, just 3 zones, and we still have more, but we wanted to be able to show the market some of the preliminary results, and we were actually able to show indicated resources as well, which is very, very positive. The other project, it's again the standard mine project. The reason why I call it standard mine is because there was a mine as well here. As you could see previously in the previous slide, again, we have a historical graphite resource because there was a mine there. And then again here, with the standard mine, there was also in this location a historical mine. So we, probably without much of a surprise, we were able to drill and establish a resource for this project as well. So we started with about 6 claims. After finding some good results, we expanded to another 79 claims. Again, for standard graphite mine, we have a resource mostly at surface, and is also, as I said, relatively high grade. By that, I mean, it's similar to the Lac Aux Bouleaux, which is about 6%, 7% grade. I'll show you other projects in Canada. You'll see they have, you know, a much lower grade. Although there are others also would have a much higher grade, but those also come with some other impurity issues and processing issues. So 6% tends to be a pretty good sort of level of grade, you know, when, you know, impurities are under control there as well. So let's then talk about the strategic graphite resources that we've established. So the various zones, as I said, for lab, the peak zone, which is historical zone, zone 1 and zone 3, and in standard, we also drilled there. So the total resource combined, it's about 1.6 million tons of indicated and 1.6 million tons of inferred, and they both at about 7% grade. So these are just profile pictures at the top of the zone 3. You could see a lot of the red and the pink. This is at surface, high grade. And again, standard mine, you could see actually the way the cross section of that pit is, you can see the different layers in this particular cross section. So it just shows that, you know, the nature of the mineralization in the Lac Aux Bouleaux area and how it has been mined over the years. So the last project is the Black Pearl project. We don't have a resource yet, but we just put out some some drilling results yesterday, and we are able to see what we were basically able to expose at surface. We see structured layered, and anywhere, like you see, from 3, 4, 5 meters. As I think one of our intersects were 12 meters at high grade. Actually, it's the other way around. I think it was about 6.5 meters, 9 meters at about 11.3% graphitic carbon, if I'm not wrong. But it's been published, and we are very it's available, and we are very happy that we are able to see. So we are, you know, more of these results are coming out for next week, and we look forward to sharing them. But what is really special about Black Pearl project is that you know, it extends to about 1.2 kilometers. So there is potential to find a significant resource here. We are very hopeful. So we have done also metallurgical tests that prove that we are able to produce the minimum, which is the commercial grade, the minimum of 93, but we're seeing 94, 95 graphitic carbon grade in our concentrates, and the recoveries are in both cases more than 90%. So going forward, so this year we'll be able to, as I said, for the few zones, we're able to publish a resource, both indicated as well as inferred. But we are very happy with the indicated, which allows us to more quickly reach a reserves once we do all the other economic tests. We are putting applications for bulk sample, and we already in the last quarter of this year, we are already doing exploration work at Black Pearl, and all these samples we're looking to be able to continue expanding our metallurgical work. For next year, we are hoping to be able to do the bulk sample extraction, use that bulk sample to do more metallurgical tests, depending on how the permitting goes, if it's sizable, potentially even testing it at our neighbors' facilities, and then advance rather quickly, as fast as we can, with the permitting and the feasibility study for the core model, so that we can extract that ore and be able to sell it to our neighbors. And so by 27, 28, site preparation and hopefully mining operations may start at that point. So we are looking to fast track the process as much as we can. Markets permitting, we should be able to to reach that. So we have a very experienced team, short, just a few directors, 5. And so she's just a highlight of the opportunity for investors. The number of shares is tight. It's about 20 million shares that we have. Options, about 1.5 million options out. See the warrants, about 15.2 million. Fully diluted, we have about 35 million shares outstanding. Cash in the bank is around 0.7 million. And again, as we talked in the beginning, there's potential for significant growth here. Market cap it's relatively small still, given the potential, sitting at about 3 million. So this is it. I leave it as that. Went a little bit past the 20 minutes, but hopefully we will be able to take a number of questions with the time remaining. Thank you for your attention.
Well, thank you very much for the presentation, Luisa. It's a very interesting project. While I encourage everyone to send their question in the Q&A box, we did receive a few, so please keep your presentation open. I think that one of the competitive advantage you have is that deal that you signed with Norton. Can you walk us into the process that led to that deal? This is extremely unusual, and obviously it leveraged something that is missing a lot, I find, in the junior space, which is basically one company helping the neighbor, which is something we should do and see more often.
Yes. So when Northern Graphite acquired the Lac Aux Bouleaux processing plant and the mine, Julian, if folks go back to their presentation at that time and that disclosures they came in and explain how much they paid and all the different things, it actually outlined there that the mine life for that deposit was about 3 years. And so from the get-go, they knew they needed to do more exploration or find more ore for their plant. And so when we listed about 3 months or 2 months later, so we listed was around the end of September, very end of September, October. And so just around Christmas, they reached out to us and they said we might have some of information about the areas that you have, because Lac Aux Bouleaux owners own those claims previously, and so maybe you should talk to us. And so that was the first time they reached out to us, and then obviously we were very interested, and we started talking from all that time until now. It's been about 4 years, about how we could work together. So they were very flexible. Of course, what they're interested is in the material. They have the plant, and at that time, and I think it's still now, they're interested to see more of the downstream development as well. So they were happy to support us in whatever ways, so that we could continue doing what we do as an exploration company, to expand our resources and to bring value to our shareholders, and be able to share that facility in terms of processing, so that they can go downstream into the different applications that they have visibility, given that that mine has been in production now for so many years. But that is the way we have been sort of discussing. And then I think last year, we published our agreement, our development and production sharing agreement.
All right, well, this is a great story. So basically, one of the things that we are looking up for the juniors is, and one of the things that is well known in mining, is that the best place to find a mine is next to another mine. In that case, not only that, it's to find one mine that the neighbor wants to process your ore. So I think this is on that quite unique as a situation for sure. And then can you tell us a bit about specifically, what does it eliminate, the fact that you could be using someone else mill and someone else processing plant, in terms of timeline, a little more about it, and in terms also of capital expenditure and all the insecurity that comes with that usually?
Sure. So when you when you're mining, you have to think about different things. Of course, there's the whole site preparation that goes with it. You need to understand where your waste is going to be. And then you need to understand where you're going to put. You have to do a lot of geotechnical drilling to determine where your processing plant will basically be. And once you process, you end up with quite a lot of tailings, usually, because many of these minerals and metals are found at relatively low concentrations of a few percentage to 5, 10, maybe, but you always end up with tailings. That's the bottom line. So you're going to have to permit for that as well. So this is just simplified, key points. So when you basically just quarrying, you have to think about what quarrying is. If you think about folks that quarry for gravel to make roads and things like that, they basically go in, they blast it, and they crush it, and they sell it, to simplify it, and in a way that is what we are planning to do. I'm not even sure. We don't really need to do that much of crushing, maybe just for the sake of transportation a few kilometers away. But most of the grinding and the flotation, it's all going to be, it's all done at a processing plant. So if you think in terms of capex, we're going to have to prepare the site so that the pit, the integrity is safe. So some geotechnical work drilling there for to opening the pit. Some roads to get to the site. But little, but not much more with that. We don't have to spend money, millions of dollars with the processing plant, and we do not have to be thinking in terms of the tailings, because there will be no tailings at our site either, because we are not going to be processing at a site. So that will save us time in terms of costs, environmental costs, and capital costs of actually building a site for those tailings, and the engineering costs that goes with it as well.
Engineering preparation, all the
exactly
environmental
what kind of,
and so on. So usually
yes,
this can be a 2 to 5 years process minimum. And one thing is for certain is that someone that look at your land package and would see lakes and would see other places and would be scared of being, can that be permitted or so on. You will not, and I ask you the question again to make it clear to everyone, you will not be on the same basis as a new mining operation that wants to have tailing and that wants to be a big crushing and processing plant on their land, but rather just trucking or finding a way to send the ore to your neighbor. Is that right?
Correct. That's correct. That's correct. And that's why we like to call it a quarry model. And it's written because it's really in terms of, extracting the rocks and having them transported to the site where, and then it will be processed further, crushed, ground.
Perfect. And before we just join with our next presenter, just one last quick question. You said that the neighbor had a mine life of 3 years. With what they are expecting production to start, when would that bring us to?
So, so they, I think the last press release they put in, they said that by the end of the year, they're probably going to run out of ore, and they look for raising money to expose some of the deeper resource that they have. So they had drilled last year, and they found additional resources, but it was really deep, like 100 meters. And in order to access it, they borrow from the government, or they have a very favorable loan from the government. I think no interest to be able to do that. They got some of that money, and I think they are looking to raise a few more. And if that happens, they should be able to continue to mine for a while. But in order to expand the sector and the ability to vertically integrate, they are still obviously very much interested in ability for us to be able to mine rather more economic material at surface.
Perfect. Well, this is great, Luisa. Thank you very much, Ms. Moreno, for the presentation on Graphano Energy. It was very interesting. Different business model, more streamlined, faster, quicker, less expensive. We wish you the best of luck,
That's right.
Luisa.
Thank you so much. Thank you so much. Bye.